Hello, I've returned with another ADH Wealth solution. Today, we will begin to discuss fulfilling all of your financial needs. As always, this is a basic description. For an evaluation of your own, please schedule an appointment. My information is in the description. Lastly, make sure you hit the like, drop a comment, and if you're new, subscribe and hit the notification bell so you're made aware every time I release new content. Yo, it's your boy, the insurance junkie, your fiduciary fella, the all-star advisor, Alonzo Hall. And I've returned today to whap and tap on your head with another ADH Wealth Solution article. Before we go in, ladies and gentlemen, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share. Lastly, to contribute to channel growth, you can donate. You can schedule a one-on-one appointment with a licensed financial professional, or you can purchase life insurance directly up to $1 million with no medical exam and an instant decision. The link is in the description. So as we proceed to give you what you need, today's article is from the portfolio construction section of Think Advisor, and it says bonds show hedging magic in the latest test to rebuff the 60-40 haters by Anshali Waranchate, a November 29th, 2021 article. Bonds have been down all year, but the Omicron fallout is a reminder that they are anything but out. With the S&P 500 posting its biggest slides Friday since February on spread of the new strain, Treasuries rallied big time on haven buying and cushioned the sell-off in global risk markets. The move pushes back against the loud anti-bond brigade on Wall Street, which argues the asset class is a portfolio diversifier and no more, citing in tandem moves with stocks at various points of the pandemic risk cycle. It reveals that treasuries still provide very good cross-asset hedging. Michael Purves, founder of Tallback and Capital Advisors, wrote in a note, "When there is a macro shock, the bid can be ferocious, strong inflation notwithstanding. Treasuries were on the back foot in Monday, trading amid the revival in risk assets, with the yield on the 10-year benchmark retracting about half its Friday move. Beyond the one-day bounce, there are bigger reasons why bonds and balanced portfolio strategies that rely on them aren't broken in the age of inflation." In a recent study, Arday investment management researcher Laura Ryan stress-tested investment strategies across economic regimes. Her data confirms that over the decades, balanced portfolios allocating 40% to fixed income and 60% to shares really do enjoy lower portfolio volatility than those loaded with risk assets. You know, those people who don't buy things like insurance, which are backed by bonds, and just buy risky investments. The consensus now seems to be that government bonds are not doing their job, she said in a telephone interview from Sydney, where her research helps inform strategists at the specialist fixed income manager that targets low volatility returns. That argument fails to consider the relative importance of bonds in reducing overall portfolio volatility. Ryan's study shows that if an investor were to hold only equities, the volatility on that portfolio would be 24.6%. Adding 40% bonds takes the volatility to 14.2% in recent years. For this reason, the researcher recommends clients keep the faith in the diversifying role of bonds. Bonds will continue to provide diversification if bond volatility is lower than equity volatility, even if the correlation is positive, Ryan said. They might a less valuable asset compared to their own history, as their expected returns over long-term horizon are much less than equities. But if you want to make sure that you're not going to suffer a wild price swing, then bonds serve that purpose. The extent to which bonds prices swing drives overall portfolio volatility matters more than the degree to which stocks and debt are correlated, according to the study. Of course, none of this will assuage the concern about the prospect of lower returns going forward. Global government bonds have lost 6% so far this year, on course for their worst annual return since 2005. That's made bonds and their champions something of a pariah. It's been one of the more difficult years to be a fixed income PM. We're certainly not invited to many dinners, joked Ella Hoxa, senior investment manager at Pitchett Asset Management, in an interview with Bloomberg TV Friday. Still, Hoxa wouldn't worry too much about her empty social calendar. Notwithstanding their recent choppiness in the pandemic and monetary news flow, treasuries are a lot calmer than stocks, historically speaking, a dynamic that has room to run thanks to interventionists, central bankers. So ladies and gentlemen, that's the article for today. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, you can contribute to channel growth by donating. You can schedule a one-on-one appointment with a licensed financial professional, or you can purchase life insurance directly up to $1 million with no medical exam and an instant decision. The links are in the description. With that being said, wipe ass, work in progress every day and see success. Wipe ass, work in progress every day and see success. Wipe ass, work in progress every day and see success. And remember, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute. Interested in having an evaluation? Find my contact info in the description and schedule a consult to explore your options. Have a financial question but don't know who to ask? Email me at a.hall@cgwealth.financial and your question may be answered in my next video. Security products are subject to investment risks, including possible loss of principal. Before investing, carefully consider the investment objectives, risks, limitations, charges, and expenses of the product and any underlying investment options. This information can be found in the product and investment option prospectuses. Copies are available from your registered representative.